Good morning, folks, and welcome to the Short Vol Show. My name is David, and if you're here, you are interested in the VIX and maybe UVXY. There are several new people to UVXY all the time, and if you want to find new people that are interested in UVXY, the best place to look would probably be on StockTwits. That's where I find new people, and there's always questions, and here's one by somebody that says, when to short? And I suppose that person has the right idea in a way because they are thinking to short this. And anybody who looks at a chart of UVXY over a period of time will see that it always goes down over a period of time. So, for example, if I were to pull up a chart of UVXY, which I just might happen to have one behind me, say right there, then you would see that it does indeed go down over time. So if I kind of reposition things a little bit here, and I back my chart out to 3 years, you will see it going straight down. Now, why does this happen? Well, the main reason it goes straight down over a period of time is due to the effects of a continued state of contango between the two futures that make up the pricing of UVXY. Now, that's a mouthful, I know, but take it on faith for a moment that there are forces which push this down lower and lower. Back to the question on the StockTwits page, when to short? Well, that's always a good question. And the most common answer would be wait till you get a little pop up in price and then jump into a short. Now, the forces of decay on UVXY right now are in their, shall we say, normal state, in that the product is decaying and is set up to decay in a very sort of healthy state. And by that, I mean that the term structure, which is a way of describing the relationship between the futures, the VIX futures, is in its normal state of contango, and the relationship, the contango refers to the relationship between the two front month futures, the August and the September future in this case, otherwise known as the M1 and M2 future. But in addition to that, there is a wide space between the front month future and the spot VIX price, or the cash VIX price, as some people would call it. On this chart, that would be the distance between the front month future and this line here represented, which is a spot represented. It says 12.56 there. So I will graphically illustrate that here by taking a little snapshot of this, and which allows me to write with a pen, a graphic pen here. So the relationship between these two futures here is contango. That is sort of the slope of this curve here, or the percentage difference between the two. In addition, this space here between this future and spot is pretty wide right now. That's at about, it's been bouncing around $1.70, even up to like $1.80 or $1.90. So that's a good distance. All of this, as we move through time between August, we're not even actually in August yet, but as we move through time, we are looking at sort of different slices of where we are in this chart here. So even though we're not in August yet, we are using the August and the September future. So we're about a week into the 4-week cycle right now. So we might be maybe right here on the chart. So if we were to kind of freeze in time right now, the situation, the distance between this little line that I drew shows the potential decay. Let me draw that again. So if we're like a quarter of the way through this distance between the two futures, which would be like maybe right there, that space represents the potential for making money as this future falls down towards the spot price right there. And we know that this distance between this August future and the spot is about $1.70, and we can calculate this distance too. And so we can kind of extrapolate in between these two, that this distance here where we're at right now might be somewhere around like $2, let's say. And so that's a healthy amount. And even if these futures were steeper in contango, if this amount were only like say like 20 cents, there would be less potential than if these futures are less in contango here, and there's a lot more space between spot and the futures. So this distance between spot and the futures is room for this to decay more. So that being said, when is a good time to short? Well, I would say now would be an okay time to short. What goes into that decision? Well, most important thing that goes into that decision is not this term structure and what we're looking at with contango and all that. The most important thing that goes into the decision of when to short a UVXY or a TVIX is, where is the VIX historically? Okay, because these forces of decay, remember, are medium to long-term forces. In the short term, where the VIX is the most important factor that you can look at. And 1275 in the VIX, well, that sounds like a little bit cheap to me. If we look at, however, a 3-year chart, which I happen to have right here, you can see that, well, if we looked at 2017, where we are now is at the very high end of the whole of 2017, and it's maybe in the middle of 2016. So maybe this isn't all that cheap. Maybe this is average right here at 1275. Time will tell what happens. If we look at things just in the last, since the big spike, well, this is very much on the low side. If we look at things based on last year, this is on the high side. So we're kind of like in the middle of a range here in a certain sense. So two opinions. Sound familiar? Happens all the time in trading. Different people have different opinions on things, and there's different points of views, and that appears to be the case right now. 1275. Some people would say it's very low. Some people would say it's very high. Now, when you're saying where to sell, I say back to you, what is your time horizon? How long are you willing to hang in there to realize a profit? Because I can almost guarantee, I can pretty much guarantee a victory for you if you are shorting UVXY and you have the time to wait for it to go lower, that it will definitely go lower. If you say, well, I'm shorting UVXY, I've got enough money so that no matter how high it spikes, I'm not going to be forced to cover, and I've got a year time horizon, then I would say short anytime, short now, short next week, no matter what price it's at, short it, and it's going to go lower within the next year. But if you say to me, I've got my rent money that's due next month, I've got nothing to do with it for the month, I want to make a little bit of money on it, I've got this $1,000 for my rent, and I have to pay my rent a month from now, but in the meantime, I want to make some money off it, so I'm going to use it to short UVXY. I would say, well, maybe you should be a little bit more careful about your entry and exit points, because I can't say for sure what's going to happen in the next month, and nobody can really. I do know that this is a kind of more of on the low side of where we've been recently. However, look at the chart here. It looks like we're kind of trending lower. If I go back to a 1-year chart, then it looks like, you know, we're trending lower, but we are on the low side of where we've been lately. And these forces of contango and decay are definitely pushing down on this thing. We have contango of 6%. Now, if you have a $10 instrument and you have 5% contango per month, that means that it's going to decay about 50 cents per month, all things being equal. So if UVXY is $9.50 right now, all things being equal, it will be $9 next month. So with UVXY right now indicated $9.50. So that would mean, all things being equal, 2 months from now, we will be below the all-time low, which is $8.56 in UVXY. Even if the VIX just stays where it is, UVXY will decay. So I think I've made that point in a couple different ways right now. People I know can get frustrated with the sort of lack of action here. You know, in February, UVXY was nerfed, as they say. It was reduced in its leverage from 2 times to 1.5 times. And so things move slower nowadays, and we don't have past data to really fall back on as well as we did before, when it was 2 times leverage. And you know, past data, otherwise known as or part of past data could be considered technical analysis, doesn't necessarily predict the future. I know some people live and die by it and trade based on it. I am not one of those people. However, this thing will take out the all-time low pretty soon, and I think that will generate some more excitement. At some point, this will reverse split, and I'm really looking forward to that time, because with this at a higher price, it makes the options trading a little bit more exciting, because you have a little bit bigger premium levels, and between the strikes, basically, like, it just makes it a little bit more tradable. If this were to, you know, 5-for-1 reverse split, or even 10-for-1 would be even better. So I'm looking forward to the reverse split. I think it will come. We have to take out the all-time low, and then if we can maybe hit $7, they probably will announce a split. We'll have to wait and see when that actually comes, but looking forward to a reverse split sometime soon. In the meantime, I have been looking at other things to trade, like many people have, because sitting there watching UVXY go up or down 20 cents can get a little tiresome after a while. Now, and people talking about a VIX spike when the VIX goes up 35 cents maybe have a different definition for the word spike than I do. Appreciate everybody who's in that Facebook short VIX group, and as I've said before, things aren't as exciting as when the spike was going on, but there is money to be made in VXX and UVXY, and trading is not all about your excitement. It's about making money. So there's ways to do that when things are calm, and there's ways to do that when things are quote-unquote exciting. I like to follow different people on Twitter, and by following one person, I was able to come across a calendar spread in MasterCard yesterday, which I was looking at, which I found to be pretty interesting. MasterCard is one of these issues that just kind of slowly creeps upward. Look at that chart, just creeping upward. That's an amazing looking stock chart right there. And this person had the 215 calendar spread on. So buying August, selling July 215 calls, and it was work out perfectly to have that on with a couple days to go if this just sort of creeps up towards the strike. I'm trying to, okay, so this is the person who was talking about the spread. Greg Harmon, CMT. He has this Dragonfly Capital, and he has a newsletter that you can, I think it's like $750 a year, but gives great ideas. And I've been following some of his tweets. He's also has one on Square. I have a friend who made a bunch of money being long Square. I think a lot of people have done well in Square lately. So here's his rolled MasterCard July, August 210 call calendar up to 215 strike for a 20-cent credit. So there you go with that. And he has other interesting trade ideas here. Here's a Biogen trade idea. Really smart guy, interesting, and I've been kind of dissecting his trade ideas lately. Once again, this is Greg Harmon, CMT. It's at Harmon Greg on Twitter. So maybe check him out. Another thing I've been checking out is this Josh Brown post for, I believe it was his post originally, and it's in the Huffington Post. It says the most dangerous people in financial media, and he lists 25 people, and I found some interesting stuff to look at through this. I found this website called Naked Capitalism with Eve Smith, and clicked on that. There's some interesting stuff here. We've got, let's see, Brexit crash. There's interesting links to stuff. I found these links to I think it was like the top astrology photos of the year, something like that. But take a look at this. You can Google this, Huffington Post, 25 most dangerous people in financial media, and I found these different people's names and was looking up about them as kind of inspiration for my own sort of delving into financial media here. I know I look in the morning a lot of times at Drudge Report as a news source, and I know there's other stuff out here. They list in here, for example, where is he? Hold on, stay with me one here. Tyler Durden from Zero Hedge. Now, Zero Hedge is kind of a controversial website, and I certainly am not a fan because I see it as kind of like almost like a Fox News type thing that's very partisan Republican from my point of view, and I try to limit my exposure to like partisan stuff from one side or the other, really. I know everybody has a view, and that's fine, but for some reason this Zero Hedge stuff bugs me a lot of times. But listed here as number 3 under some of the most dangerous people in financial media. Terry Burrell. Let's take a look at this stuff here. Smash Mouth investigative journalism. CNBC investigates Barry Honig trading in Bitcoin company Riot. We witnessed somewhat of a reporting miracle today. CNBC TV journalist Michael Caruso Cabrera and her producer Scott Zamos took on on-the-ground investigation into the questionable activities of microcap investor Barry C. Honig and got out from behind the desk to do some real reporting. But some of these reporters report on like regulatory stuff, and I don't know, it's interesting. I always like to find new things to check out. One of the ones I was always looking at is investing.com in the morning because they kind of gave commentary. Investing.com. before the open to say, okay, what's going on today? So, and this is what it says for today. It says, futures drop as Boeing GM results disappoint. Opening bell, US-EU talks freeze stock surges FX markets. European stocks and U.S. futures seesaw ahead of crucial U.S.-EU meeting. Asian stocks benefit from Chinese stimulus plans. S&P inches toward January record. NASDAQ composite post intraday record. That would have been yesterday around 10 in the morning. European stocks and futures on the S&P 500, Dow, and NASDAQ 100 are seesawing below neutral levels Wednesday as investors find it increasingly challenging to disregard escalating global trade headwinds ahead of a meeting between President Donald Trump and European Commission President Jean-Claude Juncker. I'm not sure if I'm saying that correctly. The Pan-European Stock 600 opened slightly higher as banks posted mixed financial results. Deutsche Bank reported second quarter $468 million net profit. All right, so back to trading. So I have this Tesla spread on, and it's been kind of breaking even because I'm collecting the decay every day, but I have a slightly long delta, and it's been going down every day. So my gains in decay have been offset by my losses in delta, it seems. And I'm really trying to make the decision of whether I'm going to hold this through earnings. Now, earnings is coming up a week from now on the 1st. And let's see, news story 725. Tesla's stock volatility is bewildering, says Morgan Stanley. Yes, indeed it is. It's a crazy stock. So let's see, Tesla. Extremely challenging to come up with trade strategy for Tesla right now, Morgan Stanley says. Volatility surrounding Tesla Inc. is making it extremely challenging to come out with a coherent trading strategy for the stock at the moment, analysts at Morgan Stanley said in a note Tuesday. The analysts, led by Adam Jonas, kept their rating on Tesla stock their equivalent of neutral, saying the stock trades near its fair value amid recent volatility. Wow, they came out and said that it's fairly priced. I guess you can't argue with that. That's why it's priced at that price, because it's fairly priced. Great. Thank you for that insight. That's what you pay them the big bucks for, I guess. The note from known Tesla bulls addressed several concerns swirling around Tesla, including Chief Executive Elon Musk's recent behavior on Twitter and news the company had asked some suppliers for discounts. The analysts wrote that they have fielded several questions from investors about the unpredictable nature of Tesla management's communication strategy. I guess you could call it unpredictable when Elon Musk just kind of goes off in these tangents and stuff, but I don't know exactly what that has to do with the valuations of the company, but of course it does, because the stock market is an emotional place and people play on their emotions and trade on their emotions. And so if they don't like the CEO, then they sell. If they don't like a tweet the CEO tweets out, then they sell. So everything affects these stocks. I like to see the stock market as a popularity contest. I know that flies in the face of these analysts with all, reading all the financial reports, but sometimes it can be a popularity contest. It's just the way it is. Tesla shares are down more than 5% this year, contrasting with 5.5% gains for the S&P 500 and a 2% advance for the Dow Jones. That underperformance is starker in a 12-month period, with Tesla shares down nearly 14%, compared with advances of 14 and 17% for the S&P and the Dow. Now, I think a lot of this has to do with the fact that Tesla's bleeding money, and it's not going to go in a linear progression. I have this chart next to me, but if I back, it looks like it's sort of going sideways right now, and maybe that is the case for like 6 months. But if we look at this over, say, 3 years, you're going to see it has been moving higher. I think that we're going to have to see what happens through earnings. When I look at my position, it shows me being long 100 Vega. So that means that for every point that volatility goes down, I will lose $100. And it shows September being a 50 vol and August, which I'm short, being a 70 vol. And when I go on my Thinkorswim here, I can go to the not the trade grid, but a different part here, which doesn't appear to be coming up at this time. I may have to reboot my setup, but essentially I was going to show you about volatility here, and that 50 vol is still pretty high in the range. So this thing could get smoked after earnings to a much lower vol. I mean, it could come in 20 points. If it came in 20 points, then that would lose me $20,000 in in September volatility being crushed. However, I believe August will get crushed even more if that's the case. So, I'm interested to see what will happen in earnings. And one thing I am considering doing is taking half my position off right before earnings and then riding the rest out and see what happens. I think the ideal scenario for me would be that this thing, since I have a slightly long delta, that this thing moves up to like 350 on earnings and doesn't take out the high of 373, but moves up after earnings. That would be the I think the optimal situation for me with this position I have on right about now. Thank you everybody for watching today. I appreciate each and every one of you for watching my videos, and thank you everybody who has supported me on Patreon and other ways. If you can give a buck to help support the channel, that would be great. If not, if you want to leave a comment, that would always be appreciated, or a thumbs up. Anything helps to let me know that you're out there and watching. So thanks always for your support. The marijuana stock situation. Okay. I'm almost afraid to say that word on YouTube because they don't like it. They demonetize you for talking about quote-unquote drugs in any way. So I have to be careful. Afria, I've been long it since over 9. Now it's in the low 8s. There's the chart over an extended period of time. Doesn't look great. But I kind of have faith that these things are going to move higher at some point soon. According to Justin Trudeau, the Prime Minister of Canada, MJs will be legal by October. Now, that run-up that you see is up to December, and that was the point where I made money in MJs, was right up in this run-up to December. Now, things have quieted down a whole lot here, but when things are quieted down a whole lot, that you would think would be the time to maybe jump in. Let's take a look at the chart for CGC, which is canopy growth. Now, this one is more interesting to me because it does have options attached to it. While we're on the subject here, I do want to highlight somebody, a guy who's been making, or a group who's been making videos on YouTube. There's enough room for all of us to make videos, and you can watch both of us. I don't feel threatened by another YouTuber. So let's take a look. This is Tico Traders, and they do MJ videos a lot. So please check them out. It looks like he's covering weed today. Let's see what he has to say.
Hello and welcome back to TicoTraders.com for July 24th, 2018. My name is Amit, and
so
welcome.
Check them out.
So I'm just going to start off with letting everybody know, as Tico had mentioned on the weekend video, that we are releasing our Volume 1 educational.
So anyways, that's Tico Traders. If you want to check out more about MJ, there is the Facebook MJ group, which you can sign up for. I apologize that we haven't been more active in that group. We're kind of just starting out and starting to grow, but we'd love to have you come on there and make comments and be active and help us to grow on there. He's going to analyze, I suppose, some of these MJ stocks in this video, so check them out. They're under Tico Traders on YouTube. The other guys that I like to watch is chartguys.com with my buddy Dan, who does analysis as well. This chart looks a little bit more bullish than the Afria one, which is just kind of like sideways for a long time here. I think a lot of people thought that they were going to make quick money in this MJ stuff, and so they bought and then they kind of gave up, and they're still continue to keep kind of like giving up. But I do believe that this will take out the highs at some point in the near future. I know that there's questions of capacity, and the other thing that I think some of these guys didn't actually think of is that the cost of that you can sell cannabis for on the open market could go way down once everything's legal. So, if you're pricing in what it costs to buy a bag of weed from your local dealer when it was totally illegal, if you're using that to price how much money you're going to make as a company, you might be in for some trouble because prices may come way down. The other thing is like there are a lot of people getting in on this business. It's like the gold rush. There's so many companies that have started up and that are getting together. Now, granted, some of these companies like Afria are ahead of the curve as far as getting their regulatory filings in place and making strategic alliances with other firms. However, there is a question of capacity and how much there might be overcapacity. It's hard to ramp up production. It's hard to tell how much demand there's going to be. But suffice to say that this is going to be a huge industry, and I've got to believe that these are going to take out the highs of December at some point soon. So I'm hanging in there with my Afria purchase. I don't think I will add to it here, but I'm definitely hanging in there with it, and I'm thinking of maybe doing a CGC vertical at some point, that being buying options to take advantage of an up move. So let's just briefly look at that. CGC is the symbol, and instead of buying 100 shares of a $25 stock, one share is $25, 10 shares $250, 100 shares $2,500. Instead of paying $2,500 for 100 shares and having that money sit there, I could pay $1 for a Jan 40 call, and then I'm paying $100 and I'm controlling 100 shares of stock in a similar situation to buying the stock. Now, if I buy a Jan 40 call, it's got to get up to 40 before that call is actually in the money. So that's $15. It's got to climb in the next 177 days before. Well, my break even, if I paid $1, would be the strike price plus whatever I paid. So $41. If I paid $1 for the call, then I would have to add that $1 that I paid to the strike price. So 40 plus $1, $41. So this would have to really move up a lot for me to break even on expiration. However, if I pay $1 for the call right now, this wouldn't have to move up all that much for that call price to go higher between now and expiration. So you could take the Jan 30 call, for example. That's only $5 out of the money. You could pay $265. So pay $265 for one call. That's 1/10 of the money of buying 100 shares of the stock, and that would control 100 shares of the stock above 30, which is only $5 away. So this buying one of these Jan 30 calls, you're locking up 1/10 of the capital of buying 100 shares of the stock, and you're getting very similar results if it rallies. Now, if it sells off, you risk losing that whole $265 at the end of that 177 days. However, between now and then, you could sell the call out for a small loss. You could do something against it. You could find a way to reduce that cost basis. But in this case, it's definitely advantageous to use options. It almost is in every case that where there's options available. If you have an opinion on an underlying, using options can reduce the amount of capital that you have to commit to a strategy. Once again, if you were to buy 100 shares of CGC for, let's say, $25, the market right now is $24.93 at $24.99. If you were to buy 100 shares paying the market, that would cost you roughly $2,500. Now, if something really bad happened and the stock went down 50%, well, you're out half of that $2,500. Conversely, if you were to buy the Jan 30 call for, let's say, you could probably get it for $250, then you're paying 1/10 the money and you're still controlling 100 shares. And if something really bad happened and the stock once again went down 50%, well, you could lose 50% of the price of that call. You might lose $100 and something, but that's much better than half of $2,500. So the very simple strategy, I'm kind of like slowly easing people into options trading here. The very simple strategy of just buying a call as opposed to buying stock can, it frees up your capital to do other stuff at the same time in other stocks, and it also gives you control of 100 shares with much less money. So that is a great thing about buying calls. And if you were, the other thing you could consider doing is buying a call vertical. Now that, if you buy a call, you have unlimited upside, right? Because the stock could go to infinity. Now you could cap that upside, but at the same time reduce your cost basis. So for example, you could buy the Jan 30 call for $250, and then you could sell a Jan 40 for, let's say you got lucky and sold it for $1. So now your cost basis is only $150. So you're paying $1.50 for that call spread, the 30-40 call spread. Okay. The maximum you can make on that call spread is the difference between the strikes. So between 30 and 40 is $10. If you paid $1.50 for a $10 spread, the most you could make is $8.50. Well, that's not bad. If you made the $8.50, you're paying $150 to make $850. Yes, you've capped the upside, but you've also reduced your cost basis from $250 to $150. And you could buy a lot more call spreads with, let's say you just had $2,500. Okay. You could either buy 100 shares, or you could buy 10. You could buy 10 of the 30 calls, and then you'd have 10 times as much potential to make money if the thing runs. Or you could just buy one call and you've got the same potential. However, you've got the rest of that 90% of that cash to do some other play with. The third possibility is you could buy a call vertical. You could buy the 30 call and sell the 41 for $1.50. And maybe you could do 2-3 of those. If you did 3 of those, that would be $450. You've still got almost $2,000 left to go do some other trade, and you've got a nice bullish play on. So let's try to model that. So let's say we bought the Jan 30, and then I'm going to hit Control, and then left click on the bid for the Jan 40, And so that brings up on our screen here the spread, buying the Jan 30, selling the Jan 40 for 155. Now if I go to the far right side here, right click, and select Analyze Trade, that brings up our analysis window. Okay, so we were talking about doing this trade 3 times, so I'm going to change this number to 3. Okay, so here we have it. And now if I were to create duplicate order, we could see, okay, so that would take up about $471 in buying power. So you'd still have, if you had $2,500 in your account, you'd still have over $2,000 to do something else with. As far as Greeks, to do this spread 3 times, this has the equivalent of being long right here at this date and time with 177 days to go on this call spread. This has your delta at 68 deltas. That means this is sort of the equivalent of buying 68 shares of the stock right here. Now, if it goes way higher, it becomes a higher delta. If it goes a little lower, it becomes a little bit less of a delta. And that's just the way the spread works. You can look at the spread based on these Greeks, or you can just think about it theoretically like we did before, which would be, or as a risk reward like we did before, which is basically you're risking 155 to make $845. Where did I get that again? Okay, well, there's $10 between the strikes. So the maximum amount you could make is $10. $10 minus what you paid for it, 155, is $845. 10 minus 155 equals 845. So you can make $845 on expiration if CGC closes above $40 in 177 days, which is not inconceivable, considering CGC was at $36 just a few weeks ago, and it's made this big rally. So interesting stuff to look at. Let's take a look actually and see how many spreads we would have to do for it to be the equivalent of buying that 100 shares right now, doing this spread. So if I add 5, 6. All right, so let's go back to the spread in our analysis tab. Let me pull this up. Okay, so here's the spread in our Analyze tab. So as I click, do one more spread, it would be 91 deltas here. So it's somewhere between 4 and 5 spreads. So let's conservatively say 5 spreads. If we were to do 5 spreads, it would be the equivalent of over 100 shares of stock, which is the same delta as you would have for buying 100 shares for $2,500. And 5 spreads would cost you, if I pull the order in here and hit confirm and send, it'll show me the buying power effect. It would cost you about $800. So $2,500 minus $800, it would leave you $1,700 to do something else with, and you would have basically the equivalent amount of money you would make for this to move up $1 right now as being long 100 shares. If this delta where it shows 114, that basically means that for a $1 move up, you will make $114. If you had bought 100 shares of this, for a $1 move up, you would make $100. So for $800, you've got more bang for the move here than buying the stock for $1,700. And your cost base, your risk is limited. Now your upside is capped. Once you get above 40, you stop making money, but your return on your capital and your use of capital is much more efficient with this. All right, so let's see. Let's put my mug back in the frame here for a moment. All right. Well, I hope you check out the video with Adam from the Balance of Trade. It turns out that Adam is a little bit more of a controversial figure than I thought he would be. People people like to debate some of what he says on Thinking Alpha, which I think is great. I did find this neat site that shows like student feedback on Adam. It's like you can like rate your teachers or something like that. And here, let me show this to you. It's kind of cool. Rate my professor, and he has great ratings on there. So kind of cool. But yeah, this rate my professor thing where you can see, they didn't have this when I was in college. It says hilarious. 3 people said he was hilarious for a tag. 3 people said amazing lectures. 2 people said skip class, you wouldn't pass. Well, that's good. He makes it serious and takes it seriously. So all kinds of great reviews about Adam. Ooh, let's see. There's one poor one. I always like reading the poor ones, even if they are. If you miss a lecture, you fail the tests. Well, you know, everybody's got their detractors, me included. So anyways, thanks so much for Adam for doing that interview the other day. And I'm a huge fan, and looks like most other people are too. So thank you. And if your classes are difficult, well, that's good, because American students need to learn something. We've got some catching up to do to the rest of the world, I think. Okay, so coming up on the open in half an hour today, and I will be doing another show review for this Condor show. I found this show, and it's one of my favorite shows, and nobody is reviewing it at all on YouTube. And I think the reason for that is because it is only on DirecTV, so it doesn't have the wide sort of circulation that, you know, your Game of Thrones or something does. I did a couple reviews for Game of Thrones on this channel a long time ago, and you just can't compete with all the quality content that's out there. It's a very competitive marketplace. And I mean, some people have made a whole industry out of commenting on Game of Thrones, and I think they're probably panicking once the show's over. But there are some awesome awesome YouTubers in that vein. My sense and my taste in TV shows can be a bit quirky. I do like the British television and all that. So I try to find stuff that's not as well covered that I can actually make a meaningful contribution in, because there are a zillion people out there who know way more about Game of Thrones than I do. I mean, I know a lot about Game of Thrones, but there are a lot of people that spend a ton of time and effort to make awesome videos, and I can't really compete with them. One of the guys I really like is Bridge. I think his channel is like Bridge4. Really cool Game of Thrones stuff. So we'll see what happens today. Currently, NASDAQ up slightly. Dow futures down 67. ES futures down 275. Tesla indicated like 2 lower, so I guess the pain for me and my spread may continue. I didn't really lose any money yesterday, but I would certainly like to see this thing have an up day as opposed to just continuing to grind down. If we look at the chart here, it's just kind of depressing when it's like going down every day. So, of course, I'm right in the way again. So here's the chart on the weekly, but if we go to like the 10-day, that's the story, like down. I mean, I would love to have it just hang out at the 320 area. That would be much helpful, but it doesn't seem like it's going to do what I want it to. Stocks never really do what I want them to. I've gotten kind of used to that now. But we'll see. I have a small delta, and the spread has been, at least breaking. I'm up a little bit of money on the spread so far. So we'll see what happens moving forward. And if you have any spreads that you are watching in your own portfolio that you'd like to share, that would be great. Have I looked at CRSP? Let's take a look at CRSP for the commenter. And CRISPR Therapeutics, let's see. So I know nothing about this one. However, let's take a look at the vol on it, just out of curiosity here. So volatility level is pretty high in the 80s, so that's interesting to me. And I know nothing about this one, but thanks for pointing it out. Maybe we'll take a look at it. Go into StockTwits, pull up CRSP. CRISPR Therapeutics. So it looks like you had a little bit of a sell-off yesterday, huh? Let's go out to like a year chart just out of curiosity. So that is an interesting chart. And let me just do a little bit more research here. CRSP, 17 hours. Here's why CRSPR stocks are down as much as 11% today. Shares of the 3 leading companies developing human therapeutics based on CRISPR gene editing technology fell as much as 11% today. There was no new news that can be interpreted as detrimental to CRISPR Therapeutics, Adidas Medicine, or Intellia Therapeutics. But on July 23rd, many media outlets published stories commenting on a story released 1 week earlier. While the stock moves may seem to be based on rehashing of old news, there are good reasons that investors shouldn't be too quick to dismiss the concerns. As of 2:44 p.m., on July 16th, scientists published a study in Natural Biotechnology demonstrating that using CRISPR tools to edit faulty DNA sequences can lead to unintended deletions and rearrangements of genetic material. I guess my comment on this one would be that there are people out there who know what's going on behind the scenes, and it appears this is the kind of issue where, like, before something becomes public, you're going to have cheaters coming in and moving the stock one way or the other, and obviously something bad is going on that hasn't completely come out yet. So I would be cautious. It obviously, the chart don't look very good right there. So there's something brewing that's bad, it looks like to me. Now, let's look at just really quickly at edit, which is the other one, another one in the group. All right, so that's down 2, and then let's look at TSLA. All right, so they've all taken a hit, which actually is a little bit reassuring because that means it's not just something rotten for the one stock, and it's not like someone's cooking the books or something. However, it appears that there are questions over the actual CRISPR technology, and it's spooking people a little bit. But at least it's not just confined to one, because if it was just confined to one that was going down and the others were going straight up, then I would think there was something really rotten in the books or something. But, it could be that this technology was touted and then it turns out that it doesn't really work very well. And then they could all go way lower. That could happen. It's very tough with, I would kind of put this in sort of a biotech area, obviously, and very tough to trade some of these because you have these sort of binary events that affect things for you. It's not like, somebody's selling widgets and, well, we sold 200,000 widgets this year. We're expecting to sell 250,000 the next year. It's not as simple as all that. It's like you have these binary events, and by that I mean like either, a drug gets approved or doesn't get approved, or a technology works or it doesn't. And this kind of issue, there are like chat rooms and bulletin boards and sort of areas like that where people discuss these things, and the analysts can really get in and get really deep into these technologies and deduce what's going on with the stocks. For me, it seems like a frightening one to trade. I mean, obviously you can look at your volatility levels and decide whether you want to sell a little premium or not and take a risk. But I don't understand the technology at all, and it looks a little scary to me. So, yeah, gene editing. Okay, well, thank you, CoinHawk Crypto, for watching. I really appreciate that. Yeah, I don't know if you have option positions on or not. But if you have a trade idea a specific trade idea that you're interested in, we could maybe talk about it. I do like the fact that it's a high vol issue, but obviously for good reason here. Yeah, I wrote it up and got out, and I had the heart to get back in. Yeah, well, that's great if you made some money in it, and looks a little scary. But it could turn into a huge buying opportunity right here. I mean, it could be like, oh, there was nothing to that, bad news, and it just pops right back up. Once again, if you were going to buy some, you might want to consider like buying a put option to protect you on the downside. So if you did buy some here, if things went really south on you, you would have that protection. Conversely, you could buy like a small call spread. If you really did have the conviction that it was going to go higher, you could buy maybe like an October call spread, and then you're not risking that much money. So for example, where was the high? Let's see. So the high is 73. So right here, you could buy like, I'm thinking about like the 65 line maybe. You can maybe buy like 65, 75 call spread. So you're paying $2 for something that could be worth 10. You got 86 days. You got 86 days for it to come back. You paid $200. I mean, you could just outright buy the 65 call for $300 and hang out, see what happens. You got $300 invested in the thing. If all goes well, you could sell something against that. If you want to reduce that to $200, you could buy the 65-75 call spread. Then you're betting $2 to make 8. Essentially, if things go really well and it goes above 75. Yeah, there's things you can do with options there. Anyway, thanks for the comment and interesting stuff. I'll put this on my list to keep watching moving forward. Congrats on making a little money there, CoinHawk. That's awesome. Okay, so we're getting close to the open here. I appreciate everybody watching. If you have questions on a particular stock, you could leave the questions in the comments, and I can take a look at it. Once again, I'm no particular expert on a specific stock, but I like just looking at options trades and sort of taking a common sense approach to how to position yourself. If you've got an opinion, I can help you position yourself to cheaply and efficiently express that opinion in your trades. Meanwhile, the VIX up 10 cents now currently. Once again, over 6% contango. UVXY currently 947 bid at 948 as we are coming into the open. Tesla indicated down about $2, 294 bid at 295. And that's where we stand right about now. All right, folks, thanks for watching, and I will see you next time.